today we want to discuss the return inward book. Now, looking at the illustration here, we have January 3rd, sold goods to Smith, the 10 bags of flour at 10 naira a bag. Then 2, we have the 20 cartons of milk at 20 naira per carton. Then there's a trade discount of 10%. And January 5, Smith returned goods, which is 2 bags of flour and also the 4 cartons of milk. Then required, we have to prepare the necessary journal and post the items to ledger. When we look at this illustration, the first journal that we prepare will be the journal for the sales day book, because we have sold goods for the Smith. Then later, we now have to prepare the journal for the return inwards before the preparation of the ledger. So now, let's start one after the other. The sales day book journal will be prepared. Sales day book. Now, we have a date of the event. We have a particular, which is the description. We have the folio. We have the details. Then we have the total. The naira sign. Now, let's take the question one after the other. The January 1st, we have January 3rd, sold goods to Smith. We have Smith to be the debtor who bought goods on credit. Now, Smith bought 10 bags. We have 10 bags of flour at 10 naira each. That's 10 naira a bag. That's 10 naira a bag. Now, if we look at this, that will be 10 bags multiplied by 10, which is the same as 100. That is 100 naira. Then the second transaction here is 20 cartons of milk at 20 naira per carton. We have 20 cartons of milk at 20 naira per. Now, if we look at this as well, this will be 20 multiplied by 20, and then that will be 400. That will be 400 naira. Under the folio, we are going to use the SL to represent sales ledger. It means that the amount will be transferred to the sales ledger, and then we need to have this one together. By adding it together, 100 with 400, that will be 500 naira. Then let's go back to the question. They said that there is a discount, a trade discount, which is the reduction in the selling price. So now we need to consider the discount as well. We have the discount of 10%. Now the 10% of 500 naira will be the same as 50 naira. So it means that Smith now is paying 450 naira, not 500 naira anymore. So now we're going to close the accounts for that day. Now we have 450 naira, and this 450 naira will be transferred to the credit side of the sales account. So we write transfer to the credit side of sales accounts. Now, this will be the first ledger to be prepared. Now, we have determined the total sales, which is 450 naira. As well, we need to prepare the return inward book. The return inward book says January 5, the Smith returned 2 bags of flour and also the 4 cartons of milk. But when we look at it now, there is nothing like price. The price is not there. It means that we need to consider the price for a bag of flour, which is 10 naira, and the price for a carton of milk, which is 20 naira per carton. So now let's look at the return inward book. So we're going to have return the returns inwards book. Now, when we look at this, we need the date as well, the particular, the folio, the details, and the total. Now, that's another journal. We're going to have the Naira sign and the Naira sign. Now, let's go back to the question. January 5, Smith returned. Now, we have January 5. January 5. The first goods that were returned is 2 bags of flour. So, we're going to have 2 bags of flour. Then, I said the price per bag will be considered. Then that will be at 10 naira a bag. At 10 naira a bag. Now, looking at this, that will be the same as 2 multiplied by 10. Then the bag will be 20. Means that the return goods value 20 naira back to us. Then the second return here is 4 cartons of milk. Now, let's look at this. We have 4 cartons of milk at the same price, which is 20 naira. So we have at 20 naira per carton, at 20 naira per carton. Now, this will be 4 multiplied by 20, that will be 80 naira. 80 naira. Now, the total return will be 100 naira. But if we look at the question, there is a discount. Definitely, we need to consider the discount as well when we are preparing the return inward book. So there will be a discount here. That is, we have to remove the discount. And the discount of 10% multiplied by 100. We have 10. So definitely, we are going to remove the 10 from 100, then that will be same as a 90. So now it means that the 90 naira will be transferred to the return inwards book. To the returns inwards book. Now we're going to have 90 naira here. So the balance of 90 naira will be transferred. It will be transferred to the debit side of returns inwards account. Return inwards account. Now, the second part now is to prepare the ledger accounts one after the other. Now, from the first journal, we said transfer to the credit side of the sales account. So it means that we are going to have the sales account to get the first journal. The sales account. You have the debit side and the credit side. The date is January 3rd. We are going to have January 3rd here with the value. We call it sundry. We have the sundries, which is 450 naira. That's the total sales. Then the next ledger now will be the return inwards account, because as we said that transfer to the debit side of return inwards account. So we are going to have returns inwards accounts. Returns inwards accounts. Now we open this, the debit side and the credit side. The date is January 5. So we have January 5. We're still going to have sundry as well. The sundries. And the balance is 90 naira. Now, immediately, we are going to prepare the debtors account, which is the personal ledger. Now, we're going to have debtors account. Having the debtors account, now we have debit side and the credit side. Our debtor here is Smith, so we're going to have Smith account. Smith accounts. So we have the January 3rd. We sold goods to Smith, so we're going to have the sales. The value of sales is 450. It's 450 naira, so 450 we recorded here. Then Smith returned goods on January 5. So we're going to represent that one, that we have January 5 return goods, which is 90 naira. Now it means that Smith now, we're going to have 450 naira, since the debit side is higher than the credit side. So 450 naira. Out of 450 naira owing now, he has returned 90 naira back to the business. So definitely what we are expecting from Smith now will be the balance CD, the balance carried down, which will be 90 naira minus 450, and then we are expecting 360 naira from Smith. So now, for the purpose of trial balance now, the amount for the debtor will be 360 naira, not 450 naira again. Now, this is where we are going to stop for today. Thank you.